The federal government has no idea what they've just done. They're about to cause the Australian property market to explode. Their first home buyer incentive scheme, that was supposed to come into force from the 1st of January. They've now brought it forwards to the 1st of October. And they've made a few changes, and that's going to have a huge impact on property prices across Australia. Even before this announcement, Cotality or CoreLogic said prices could rise by another 13% by Christmas of 2026. Now, with this new scheme that's been brought into force earlier than expected, we could be on the verge of one of the sharpest price rises in history. So I spent the last 24 hours since this announcement came out digging into the data to find out exactly what's happening, how it will impact investors and buyers, and what you need to do before October rolls around. Most people don't actually understand how this new scheme is going to impact property prices. They're assuming it's like a small tweak to an existing policy, but the truth is actually very different. From the 1st of October, the government, like I said, is bringing forward its promise to expand the first home buyer guarantee by 3 months. Okay, 3 months doesn't seem like a lot, but they've actually expanded the scheme further than they initially promised at the election. So yes, first home buyers will now be able to buy a property for just a 5% deposit, no lender's mortgage insurance. So if you're looking at a property for, say, $800,000 as a couple, that means that you can now buy that with just $40,000 in savings, no lender's mortgage insurance, and then of course you might still need to pay the stamp duty in whatever state you're looking to buy in. But here's what the federal government has actually changed. They've lifted the price caps. So someone can buy their first home now in Sydney for a price of up to $1.5 million. In Melbourne, it's $950,000. In Brisbane, it's $1 million. This could be a house, this could be an apartment. So by increasing the price caps, people now have more choices. So sure, in Sydney, $1.5 million still doesn't really get you much in terms of freestanding houses, but apartments, you're probably likely to see a bit of a short-term bump up in prices of apartments as many first home buyers who want to have a place to call their own will seek to get an apartment because they can get in for so little. But house prices in Brisbane, in Melbourne, they're likely to keep rising even more than they already have, especially at that slightly lower budget perspective. Also, we have regional markets where the price caps are way above where their median price point sits. So in many of these regional markets where you can still buy property for $700,000 or $800,000, first home buyers can buy their first home, and it can be a freestanding house there at these particular price caps, and they'll still qualify for the first home buyer incentive scheme. So what do you think is going to happen to prices in some of these potentially lower priced markets? Now, here's what a lot of people are going to get wrong though, right? And I don't want you to misinterpret what I'm saying. I'm not saying prices are going to rise everywhere. Remember, just because prices of property in a particular area might qualify for this first home buyer incentive scheme does not mean prices will rise in that area. The area still needs to meet a number of key criteria, such as more demand from first home buyers and buyers in general, owner-occupiers, versus supply. If people don't want to buy property to move and live there, how are prices going to rise sustainably? We also then need to see that the area has other amenities that will support people wanting to move to the area. Things like good jobs growth, good schools, good amenities that will attract young families to move to the area. So don't just go and think you can buy blindly anywhere. Many people who think, oh, look, I can now afford an investment property in an area where prices for property will meet the first home buyer criteria, and they think that a lot of first home buyers will just go and buy there. Not necessarily. You've got to look deeper than that to see if prices are actually likely to rise, because it's an area first home buyers want to live in. And look, if you want more help with that, check out the link in the description below to get totally for free the audio version and digital version of my book. It's a full property investing blueprint that walks you through how to find these types of areas, because I've been investing now for 23 years and I've seen these sorts of schemes come and go, and I've seen the impact they have on property prices. And while the overall property price in Australia does almost always increase, it doesn't mean prices rise everywhere. So you need to do your due diligence. And again, if you want help with that, check out the link in the description below. Maybe you're wondering, well, how can the first home buyer incentive scheme actually push prices up? I mean, after all, isn't the government saying that this scheme will actually make houses more affordable? Well, that's where things go wrong. Even Treasury's own modelling, which mind you I think is flawed, it suggests that prices are likely to rise. But the key thing is that tens of thousands of more buyers will now qualify for this scheme. That means there are so many more buyers who will be able to enter the market from the 1st of October. But we already have a housing shortage. We know that there aren't enough properties for people to buy already, and now you've got more buyers jumping into the market. What do you think that's going to do when there's so much more demand from buyers who can now afford property, many of them because of this expanded first home buyer incentive scheme, when we don't already have enough properties for sale? Demand is going to be higher, supply is still going to stay low. And we know supply is low because we know the government is trying to build 1.2 million homes, and ignoring all the critics, the Treasury, the Federal Treasury's own modelling, which is the data the government relies on, even they have said that the government's going to fall well short of target. So the government knows it's not going to build enough properties, and now we've got more people jumping into the market. This is going to only add fuel to the fire. Now, when you consider that the timing of these incentives, we're getting these extra incentives at a time when interest rates are being cut. So the combination of these two factors, most people underestimate just how much that's going to increase demand and fuel prices higher. I mean, just consider this. After the 3 rate cuts we've had in 2025, the Commonwealth Bank says borrowing capacity has already risen 7%. Now that means that if you have a household income of about $200,000, they can now borrow over $1 million. Now that's something that was out of reach just a few months ago. And so it's no wonder then that pre-approvals have surged. More people taking out loan pre-approvals. That number has increased 12%. And loan applications to banks, if you've tried to go and get a loan application from a bank, you've probably found it's taking longer and longer because loan applications are up 13% compared to this time last year. Then add this into the mix. Westpac's time to buy a dwelling index just hit 97.8 in August of this year. That's a 4-year high and up 37% year on year. So what does this all mean? It means that more and more people are already trying to get into the property market. There is so much more confidence that prices are likely to rise, and more people are trying to buy already before prices rise even further. Now you add in all these people who can buy from October 1st, and what does that mean? So much more demand. We have lower rates, government incentives, some of the best buying conditions we've seen in years. This is why I'm so confident that we are likely to be on the verge of one of the sharpest price rises in history. Very, very similar to what we saw maybe back in 2021 when prices rose over 20% in a 12-month period in multiple areas around the country. Not everywhere, of course, but multiple areas. So what can you do to take advantage of this opportunity that is right in front of you today? Get your pre-approvals sorted. Work out how much you can borrow so you can start looking at the areas that match your budget, which also have the strongest potential for price growth and rental growth. You always want both because you're not here just to buy one property. You want to build a portfolio, right? And the only way that's going to happen, even if you think you can only ever buy one property, the best chance you have of building a portfolio down the track is to look at areas where you can get strong price growth and strong rental growth. Again, even if you only want to buy one property, getting that rental growth in addition to the price growth, well, the rental growth will help you with your cash flow over time, so that whatever you buy today, the odds are that it's going to be negatively cash flowed, but the rental growth will over time ensure that that property goes from being negatively cash flowed to neutral and maybe even positively cash flowed. And look, if you're not sure how to do that, how do you find these areas, make sure you reach out for the right help, because I can tell you right now, a lot of people, they're going to misread this whole thing. They're going to think, oh, this first home buyer scheme, it's a permanent fix for affordability. For example, Everybody's Home spokesman, Maya Azizi, says the scheme might help around 80,000 people nationwide. But that's still a drop in the ocean compared to demand. I mean, government modeling suggests only a 0.5% lift in property prices over 6 years. But analysts and past experience, like what we saw in 2021 when prices rose 20%, shows that the immediate impact could be far bigger. We could easily see prices be materially higher by Christmas of this year, let alone how much they're going to rise by Christmas of 2026. So use the opportunity. Sure, you may not be a first home buyer, you might be a property investor, you might be thinking, well, Nero, how is this going to help me? Well, if you can target areas where there's strong demand from first home buyers, that's going to increase demand in the area. More than likely, there's already a property shortage in many of these areas. That's going to give you the price growth that you're looking for. It will help you turbocharge your property investing goals. So as an investor, you can literally use the government scheme to help first home buyers as a stepping stone to build your own wealth faster. But don't do what a lot of people do. A lot of people think they should wait and see what's going to happen, wait for the incentives to come into force, wait for all the buyers to jump into the market. But by then, you'd have missed out on a significant amount of growth. Look, Westpac's August report, like I said earlier on, shows the time to buy a dwelling index is at 97.8. It's already the highest in 4 years. 3/4 of Australians now expect house prices to rise, and that was before the scheme was introduced. So momentum is already building. More and more people are looking to jump into the market. So by October, competition could be fierce. So if you're finance ready, don't delay. The window before October might be your best chance to buy with less competition. And if you can't buy before October, then see if you can buy before Christmas of this year, because I strongly believe that 2026 could be a year of significant price growth. And if you can get yourself into the market already before then, you're going to be well positioned to take advantage of what's coming. But like I said, don't just buy blindly. Do your due diligence. Don't do what most people are going to do. They're going to think higher price caps means choice everywhere and prices are going to rise everywhere. Not the case. History shows us that when demand surges, certain areas, they rise much faster than national average, much faster than other areas. We've seen this before time and time again. So this new first home buyer incentive scheme, the increase in price caps, it won't make every area a good buy. It just shifts where the fiercest bidding wars will take place. In other words, some of the areas that are already hard to buy property in because there are more people looking to buy property, more offers, multiple offers being made on individual properties, multiple people bidding on auctions. Well, those areas, they're going to get even harder to buy. So focus on fundamentals, transport links, rental demand, local infrastructure. Don't chase headlines. Instead, focus on the fundamentals that will give you long-term growth. Use this next 12 months to get that short-term bump up to accelerate your wealth, but focus on the fundamentals so you're also going to get the long-term growth as well. And if you want a proven system to build the long-term wealth that I'm talking about without all the stress, book a free call with us and we'll walk you through the exact strategy over 500 investors are already using to grow their portfolios safely and profitably. The link to book that call, that's in the description below. So the first home buyer scheme, it's about to shake up Australia's property market. And yes, it could be the spark for another massive price surge. But then not every city is set to keep rising forever. Take Brisbane, for example. It's been one of the hottest markets in recent years. Is that boom finally running out of steam? Well, that's exactly what I cover in this next video, where I break down the data and the risks and whether Brisbane still has room to grow. Go check that out now.